Hi, this is Zach with the Bulletin Board Heroes here at Zach's Traders Cafe for Monday, the 3rd of February. Starting off with the FTSE 100, which has obviously suffered from the rug pull associated with the tariffs over the weekend. We're back below the initial resistance for January there towards 85.90, and while there's an end-of-day close, or if there's an end-of-day close back below that, the next target down would be 84.74, the old May resistance. Worst case at the moment seeing as being 8400, which is basically the post-May resistance for this market, but hopefully not much worse, or not any worse than that, given that we've got the 50 and 200 day lines both rising, and we were probably rather long overdue a pullback for this market. On to the DAX, and here gap down again after having an island top earlier back in January. The risk now is obviously a test of 21,000, which is what we were actually factoring in anyway before. We've got that rising red trend channel, the top of that trend channel, 22,000, and we're still looking at 22,000 while we're above the floor of the channel there at 20,700. So nothing really changed, even though we've had a gap down. Moving on to the Dow, and here we were already looking rather ropey with Friday's price action, as if the market could tell there was something bad waiting in the wings. Probably looking for the 50-day line there, 43,700 support. Hopefully not worse than that at this stage. And obviously at this stage, only an end-of-day close back above 45,000 gives us the chance of heading up to 46,400 by the end of next month. Moving on to Bitcoin, which has obviously got nothing to do with tariffs, but has made it its business. And here you can see that we've fallen below the falling 50-day moving average, which is normally a bad sign. That suggests that we've got to get to the uptrend line from November there at 93,800, and probably even risks a test of 90,000. Below 90,000, support on the way up was 85,000. It's 85.90, and then basically 94,000 are the levels there. End of day close above the 50-day line at 99,000 would snap the weekend hit that this market has taken. Moving on to gold, and here I presume, even though it's supposed to be a store of value, there will be a pullback towards the 2,800 level. Worst case at the moment, 27.20, which is the broken October resistance line. Ideally, we don't go back below 27.50.60. Moving on to the stocks, and not many, of course, given the lay of the land. Starting off with Andrada, which is a bear trap gap reversal. We've had bounces for the shares in the low 2 pence area today, gapping higher, although hitting that line of resistance there from September. Needed an end of day close above 2.25 really to snap the pattern here and take us up to 2.8 pence. But while that gap remains open, and you can see also on Friday people were guessing that there was a bit of a turn coming, and while there is bullish divergence, then this could be at least a temporary low for the shares. But we want to close above the 2 pence level and the top of that gap. On to Cyanconnode, which is looking decent in the sense it looks like we've got a mid-move consolidation. We've closed that gap there from November as well, and above 10.5 pence, looking for 14 pence, backed by the 50 and 200 day lines rising in parallel at the moment. In fact, really basically looking for a return to last year's highs through 14 pence. Brilliant news today for EnSilica, and obviously the market being the market, it's greeted with a 5% or just under 6% rise, which is rather pathetic, but that's the London market for you. We've got a resistance line there from this time last year at 46 pence. We need an end-of-day close above that to give the shares a chance of move to the top of that rising trend channel from the beginning of last year at 60 pence by the end of next month. Obviously it'd be very disappointing if we broke back below the floor of the channel at 42 pence. Better look for Greatland gold at the moment, and something we were looking for as well. We've got our golden cross, which happened basically on on Thursday rather, and also broken above the previous target there at 7.8 pence. Above that, we're looking for 9.6 pence, hopefully by the end of this month, after a multiple test for the shares between 5.5 or 5p and 6p since April last year. So I think enough testing has happened, and we could be ready to go higher. On to Kromek, which continues to entertain the bulls and the bears at the moment. You can see that spike that we had last week Top of the broadening triangle there towards 9.2 pence, and ideally the shares remain above the 200-day line at 6.2 pence. If they do, then we are looking for a retest of the better levels. MicroSalt managed to get some money away today, and it's always positive if shares go or remain above the placing price, which I think in this case was 70 pence. We've also got a situation where we've broken a line of resistance there from back in October at 72 pence, and above that we're looking for the top of that rising trend channel. The red resistance line projection there is £1.10, perhaps as soon as the end of next month. The other point to note is that both the 50 and 200-day lines are both rising, and that tends to be, well, as it's the run-up to a golden cross, that tends to be the strongest part in the cycle. On to Mosman, which I covered last week because it was getting requested, and it was a good close at the end of last week. And basically all we're waiting for now is for the 50-day line to rise, which I think if you look closely it probably is, and above that 200-day moving average, just below 0.04, we are looking for at least 0.06 initially, and then up to 0.08, hopefully as soon as the end of next month. Moving along to the last two. The first one is one I haven't looked at for a long time, Savannah Resources, and here a rising trend channel that's been in place since November 23. Top of the channel there at 6.25 pence. That's our target for the end of next month, while we remain above the 200-day moving average at 3.9 pence. Finishing off with Zanaga, which had some decent news today. Just needs to break that neckline resistance around at 9.1 pence on an end-of-day close basis. Be gapped up today. If it can do that, then we're looking at 14 pence perhaps by the end of next month. That's it for me today. More updates tomorrow.